All right, today we're going to break down a really specific rules-based trading strategy. It's all about taking a super common and, let's be honest, frustrating market event and turning it into a really clear opportunity. This is the gap reversal system, and it's all about how to trade the trap. So let me ask you this. Have you ever seen this happen? You're watching a stock, it's in a beautiful uptrend, everything's looking great, and then wham! The market opens and the price just nosedives. It completely catches you off guard and maybe even takes out your stop loss in the process. It's the worst, right? Well, what if I told you that nosedive probably isn't random? A lot of the time, it's actually a trap. Yeah, a trap designed to shake out traders just like you. But here's the good news. We're going to unpack a system that's built specifically to trade that trap. Okay, so first things first. Before we can even think about spotting this trap, we got to get our tools ready. I'm talking about our chart setup. This is the foundation for the whole thing, so it's absolutely crucial we get this part right. So here's what you need. First, go ahead and load up a 30-minute chart. We're only going to add two things to it. First, Bollinger Bands. Those are going to help us gauge volatility. And second, a 9-period EMA. You know, an exponential moving average to keep an eye on the short-term trend. And that's it. Nice and simple. Now listen up, because these settings are super important. Seriously, they're non-negotiable if you want this to work. For your Bollinger Bands, set the period to 20 and the standard deviation to 2. And here's a key detail. Turn the middle line off. We don't need it. For the 9 EMA, just apply it to the close. Once you've got that dialed in, you're officially ready to start hunting. All right, our charts are prepped. Now for the fun part. Let's dive into the playbook, the absolute heart of this system. We're talking about the step-by-step sequence for spotting a high-probability long setup. So step 1, we need a strong uptrend. And it's really important to get this. This system doesn't predict a new trend. It's about joining an existing one. So you've got to see clear evidence. I'm talking higher highs, higher lows. The price should be trading above that 9 EMA we added, and the EMA itself should be sloping upwards. A lot of times you'll even see the price kind of riding that upper Bollinger Band. If the chart is choppy or just going sideways, this is not the setup. You just move on. Okay, so once you've confirmed that beautiful uptrend, now we wait. We're looking for step 2, the gap down. And let me be clear, this is not some gentle little pullback. We're looking for a sharp, aggressive drop right at the open. It's almost emotional. It should slam the price down towards that lower Bollinger Band, going completely against the flow of the trend. This right here is the trap being set. So why does this happen? It's not random. There's a real psychology at play here. Think of it like this. That gap is often a deliberate stop-loss hunting event. It's designed to hit all the stops from people who are already long. And what does that do? It creates a huge wave of panic selling, which, guess what, provides the exact liquidity that big institutions need to get in on the cheap. They are literally buying from all that panic. So, how do we know the trap is actually sprung and it's time to pay attention? We look for one specific thing, the rejection candle. This is our signal. After the price smacks that lower Bollinger Band, you need to see a bullish candle form. And not just any bullish candle. You want to see one where the buyers clearly stepped in and pushed the close above the halfway point of that candle. That's the signal that the power is shifting away from the panic sellers and back to the buyers. Now this is critical. We don't just pile in when we see that candle. No way. We wait for confirmation. This is step 3, the entry. You're going to place a buy stop order just a few ticks above the high of that rejection candle. When the price breaks through that level, that's our confirmation. It tells us the buyers are officially back in charge and the original uptrend is ready to resume. And that's when we get in. Okay, finding the entry is one thing, but that's only half the battle, right? Now we have to talk about how to manage the trade. Let's make this a complete plan by defining our risk and our profit target right from the jump. And you know, the real beauty of this whole system is just how clear everything is. Your safety net, your stop loss, that goes just a few ticks below the low of that rejection candle. Super simple. If the price breaks that low, the trade is off, the setup is invalid. And your goal, your profit target, it's all the way back up at the upper Bollinger Band. See, the entire trade, entry, stop, and target is defined by that single candle. It's brilliant. So, we've walked through the what to do and the how to do it, but let's take a second to talk about the why. Because, you know, understanding the logic behind the rules, that's what turns you from just a rule follower into a real strategic trader. So let's just put a bow on this. The gap reversal system works for a few simple reasons. First, it puts you on the side of the smart money. you're not actually trading against the trend. You're trading against that short-term manufactured panic. It teaches you to see a scary stop hunt as a potential opportunity, and most importantly, it forces you to wait for confirmation from buyers, and it defines your entire risk plan before you ever put a single dollar on the line. And that really brings us to the big takeaway here. Yeah, we broke down one very specific system today, but the bigger picture is about having a process. When you have a clear mechanical set of rules, it takes the emotion and the guesswork out of the equation. So I'll leave you with this question to think about. Could a mechanical system, maybe even this one, be the key to unlocking the trading discipline you've been looking for?